I actually feel like everyone keeps making this comparison to fintech, but it's actually more like, and not even banks, just like non-bank financial lending people were and mass at this thing. Like every major private credit fund CEO was at this. And so I kind of feel like Circle has a very different audience than Tether, and that audience's net worth is like almost disjoint. And the set of people who will use both is almost like basically the only time that's going to overlap is in the curve pool to trade USDC for USDT.
Not a dividend.
It's a tale of two Quan.
Now, your losses are on someone else's balance sheet.
Generally speaking, airdrops are kind of pointless anyways.
Unnamed trading firms who are very involved.
I like that ETH is the ultimate Ponzi.
DeFi protocols are the antidote to this problem.
Hello, everybody. Welcome to the Chopping Block. Every couple of weeks, the four of us get together and give the industry insider's perspective on the crypto topics of the day. So quick intros. First, we got Robert, the crypto connoisseur and czar of Superstate.
Good morning, everybody.
Next, we've got Tarun, the Giga Brain and Grand Poobah at Gauntlet.
Yo.
Joining us today, we've got Laura, CEO of the show.
Hey, everyone.
And I am Haseeb, the head hype man at Dragonfly. We are early stage investors in crypto, but I want to caveat that nothing we say here is investment advice, legal advice, or even life advice. Please see choppingblock.xyz for more disclosures. So, gentlemen, I can say we have fully kicked off stablecoin mania. We just had the Circle IPO, which is probably the blockbuster IPO of this year, and it was absolutely insane. So, for those of you who are not watching, Circle has been trying to IPO for years now. They originally tried to go out through a SPAC back in SPAC mania. Didn't go through. Then they tried to IPO earlier this year, and then tariff tantrum kind of cut that off. And then finally, one last go of it of trying to IPO. There was also talk that maybe they were going to get acquired instead of getting IPO'd. Didn't happen. And their IPO, absolutely incredible performance. So this has been one of the biggest IPO pops in history, the highest two-day IPO pop since 1980. For any IPO that raised more than $500 million, more than Snowflake, more than Rivian. Their first day close, they were up 180%. Second day close, they were up another 30%. Combined two-day jump was 250% total. They originally, in their IPO, the original IPO, they raised $1.1 billion. If they had priced their IPO at the day two close, and roughly at the current price that it's trading today, they would have raised $4 billion instead. It was underpriced by roughly 4x. Right now, it's trading at a valuation multiple. It's a little bit insane. Currently, 15x revenue of their 2024 revenue, 160 times net income. So if you compare that to Coinbase, Coinbase right now is 25 times earnings. Circle is trading at 160 times earnings. Of course, because it's an IPO, there's still a lockup. Insiders can't sell until 180 days. But it seems that right now, this is kind of the shot heard around the world, that it is now stablecoin season. I don't think anybody was expecting this. People were talking at the time of like, oh, maybe the IPO is not going to have enough interest. Maybe they're going to have to price it down. It priced up and then up and then up, and then it just kept riding on public market euphoria. Robert, I think you were probably the closest to this. What's your take on Circle Mania?
First correction, it's not stablecoin season, it's stablecoin summer. You got to get that part right.
Okay, apologies.
But
technically, it's not summer yet.
It's not? When does that
June.
begin?
How is it not
Yeah,
summer?
it's June.
Starts June 21st, technically.
Okay, fine. Haseeb was right the first time. Stablecoin
The
season.
summer bureaucrats are in full season.
Yes. I mean, this was unbelievable because I think it showed and surprised everybody with just how much enthusiasm there is for new public crypto companies. I don't think Circle thought it was going to be this successful. I don't think any of the bankers thought it was going to be this successful. I don't think the investors thought it was going to be this successful. No one on crypto Twitter thought it was going to be this successful. The real question is, where did all this demand come from? Because nobody that I spoke to thought it was going to have this outcome. Everyone was like, okay, it's going to go public. It's going to be like meandering a little bit. This has blown away everybody. And I think it's reset everybody's expectations for the valuations in public markets for crypto companies. The amount of demand here is just ferocious. And so I think it's going to expedite pretty much everyone else's plans to go public. We're already seeing that with new filings.
Well, yeah, Gemini, right?
Exactly.
Yeah.
Like there's companies that have been waiting. And I think seeing the success at Circle, it's going to be empowering for everybody else. We're going to see Gemini. We're going to see all sorts. We're going to see Kraken finally do it. We're going to see.
But do you think this is like public markets generally, or is it specific to stablecoins?
Well, I think This is both, right? I think everybody wants to get in on stablecoins. Everyone can see the Genius Act and the Stable Act and like impending stablecoin legislation. Everyone knows that this is a growth market. Whether or not Circle is the only or the beneficiary of this is for sure to be seen. I think in some ways, all this legislation could be to their detriment. But stablecoins are a hot topic. And we've had so few like true crypto native companies outside of the miners going public in the US that I don't think is limited to just stablecoins. I think this is the first shot out of the quiver, but I think there's going to be a lot more demand than people expect in general for high quality companies that are rare that you don't otherwise have access to. No one has had access to a pure play stablecoin before in the public markets. Is it overvalued? Probably, right? Is it overvalued relative to Tether? Like for sure, right? But there's no other way to like bet on this. Like betting on Ethereum, I don't think that really does it. Betting on Solana, betting on whatever L1. If stablecoins succeed, it's hazy whether or not any particular L1 is going to succeed. And so I think if you're a public market investor, clearly you aped in.
Well, so John Ma from Artemis pointed out that if Tether were trading at the same multiple that Circle is trading at, it would be worth about $500 billion. Just for reference, JP Morgan is like 700 billion. So that would make it the second most valuable financial company in the world.
Well, I think it's more justified for Tether than it is for Circle, simply because Circle's margins are actually not that good. Circle has an incredibly bloated headcount, and they share a tremendous amount of their revenue with Coinbase. The same multiple on Tether actually is far more justified than it is for Circular in particular.
For Circular?
For Circular, yes.
Well, so the other interesting thing is that Tether has announced, so the Stable Act right now, I think it's going to be voted on tomorrow. So probably by the time you hear this, there will already be a vote on the Stable Act and not the Stable Act, the Genius Act.
We're going to forecast that it passes.
Yes. Well, it passed cloture 66 to 32. So I think it's likely to end up passing, but still TBD. But right now, it augurs fairly well that there's appetite for this. That being said, Tether has said that if this passes, if the Stable Act passes, or sorry, not the Stable Act, the Genius Act passes, that they will basically pull out of the US market. Because one of the provisions of both the Stable Act and the Genius Act is that you can only have high quality collateral backing your stablecoin, such as short-term treasuries, which already is basically what Circle and most of the other stablecoin issuers own. Whereas Tether has a bunch of other exotic stuff, right? They have commercial paper, they've got Bitcoin in there, they've got other random loans. So they've got a lot of kind of a hodgepodge of collateral that they would have to totally redo what's kind of their financial infrastructure in order to be the sort of safe, secure stuff that the U.S. regulation is demanding.
But would they though? I mean, because like it has to be backed 1-to-1. They've been generating now in excess of $10 billion of profit, right, cumulatively. That has been used to buy all of this other stuff. If they wanted to go strictly to 1-to-1 coverage, I think because of how much profit they've made and how much over collateralization there could be there, I don't actually think it would be that hard for them to go to 1-to-1 backing with stable assets.
Maybe not, but they've said that they will exit the U.S. market. Now, maybe they're blustering in order to try to move the regulation, but they've said their focus is on non-U.S. markets. And I can see the rationale of that is that like, hey, this is going to be extremely expensive. It also means that now, every jot and tittle of everything we've ever done is going to be under a microscope from the Fed. And I don't know, the Tether is a famously insular and mistrustful business. They like their business the way that it is. And no surprise, I mean, it prints money. It's an incredible business. And this might be part of the reason why you see such a high premium on Circle is because people realize that, hey, Circle is basically going to have the entire US market to themselves because Tether's not going to enter because they don't want to be under this regulatory regime that's coming forth. So it's going to be Circle versus the banks. And there's been all this reporting now about the banks contemplating a consortium. I think it's like JP Morgan, Wells Fargo, and a bunch of other banks have talked about doing a consortium stablecoin among the big US banks. And so it might be that the industry separates into their Circle onshore, which is the crypto native kind of techie one. Then there's the banks, which primarily serve institutions, maybe they're more risk averse. And then there's international, which is maybe predominantly owned by Tether. And then let's say on-chain is mostly USDC, just because USDC is historically dominant on-chain. I can see it playing out where there's different domains that are really owned by different parties. But obviously it's way too early to really say. Laura, what's your take on Circle Mania?
Yeah, so I have so many things to say. So I agree with Robert that the reason that it's very frothy is both because stablecoins are hot, but also public companies. I mean, this whole trend with the crypto treasury companies, in particular Bitcoin treasury companies, people want access to crypto exposure in TradFi markets. So, like Circle kind of fits both buckets. But the thing is, like, all this stuff that we're talking about with Tether, I just had Jeff Park on the show for like a 2-part interview. And it was so interesting. Like basically, eventually what you could see is that stable coins kind of turn the US dollar into multiple products. And that's basically if the US is willing to be more entrepreneurial about the fact that it has this asset that so many other parts of the world want. But who knows? Obviously, TBD on whether the government will get its act together to understand that this is a valuable thing, and that if they were more entrepreneurial about it, they could use it in that way. But one example would be just like, I mean, everybody always talks about how Tether is a good example for euro dollars. Like, there's so much demand abroad for dollars, and like essentially, you could imagine that there's different yields based on like who it is, or like which company you're using, or like who it is that wants to mint the stable coin. So anyway, all I'm trying to say is that, I think people understand that there's like a huge amount of space within this whole category for like a number of different niches. But something that was so interesting was, so I had 2 different people on the show talk about Circle. I might have had more, but the 2 that I remember are Arthur Hayes and then Omar. I'm just blanking on his last name, from Dragonfly. What's his last
Omar
name?
Kanji. Yeah, Kanji.
Yeah, Kanji. So both of them, were negative on the Circle IPO, and they were saying like, and I mean, this is like well before the IPO actually happened. So it was like shortly after the news came out that they were going to do this. But, it's all the things that we all know in crypto, that they have huge overhead, that the business is super different from Tether because it's compliant. I mean, you even hear things like people kind of in the security space complaining about the fact that when there's kind of like bad actors using USDC, Circle will not freeze the money, because since they are a US company, they can be sued much more easily than like Tether. And so anyway, so the point is they just have like a lot more, they're much more encumbered. So what was interesting is like that was kind of the conventional wisdom in the crypto space. But then I don't know if you saw this tweet by Vicky Fu, who I guess she used to work at Circle, and she wrote, "Watching Circle's IPO pricing is fascinating from a fintech infrastructure perspective. Having built payments infrastructure at Circle, I can tell you, when you control money issuance, you're not in fintech anymore. You're in monetary policy." And then so she basically like walked through kind of, what the numbers were looking like. And then she made comparisons. She said PayPal, 70 billion market cap, $1.5 trillion in volume. Visa, $500 billion market cap, $14 trillion in volume. Circle, $6 billion valuation, $12 trillion in volume. So it's like very close to the Visa volume, but like, what is that? Like, I don't know, 12 or 13% of the market cap. So anyway, and now I actually don't know what the current market cap is. She wrote this on June 4th. But the point is just like she was saying, everybody in crypto is kind of downplaying the significance of this, but she said, the math doesn't work. 25 times oversubscribed tells the real story. Underwriters priced for safety but missed the fundamental shift. She said Circle controls the digital dollar printing press. So anyway, point is like, I honestly, I really know where this is going to go, because, just from everything I understand about Circle, like even just the fact that they have to give half of their, is it profit, I think, to Coinbase. Like Coinbase is making more money from USDC than Circle is. And, it's all this, like even, like I know for a different conversation, a different topic we're gonna cover later. Like Mosey tweeted this little pyramid of like who has the most power, and it's the people with at the distribution channel, right? Like the exchanges and stuff. And so again, it is kind of like, okay, so I know all these things about Circle and their business. At the same time, I know, yes, okay, stablecoins are going to be a huge, category. So am I like overthinking it, or, and then the last bit is just like with the banks, when the banks get in, then it's like, again, it's another distribution channel that Circle doesn't have. And yeah, okay, maybe they're going to, launch their own bank. Like, I don't know, but still, like, don't you feel like trying to create their own bank and compete with the likes of a JP Morgan? Like, how's it going to go for them? So I don't know. Anyway, so I don't have conclusive thoughts. I have like thoughts in a lot of different directions, and I'm kind of curious to see how things pan out.
Well,
Am I going to be the only non-hater on this about this topic?
Wait,
I'm not a hater. I'm a confused person.
All right,
listening to Robert and Laura,
Let's
there
hear
was
it, Tarun.
way more hater vibes.
No, it's not hating vibes.
Maybe not hating, maybe negative. Let's put it that way. I actually went to the IPO party on Friday, and so like I talked to Jeremy and saw the whole thing. And first off, I have never seen that many TradFi people showing up to like a crypto event. Like there were literally 3 of us who were like not in suits. So like that was also pretty funny and illuminating, and it was like funny, they like rung the closing bell, and it was like everyone was around in a suit, and all the people who were not in suits, well, the 3 of us were just kind of in the back. But I think it was like, I don't know. All I have to say is I've never seen this much interest from traditional finance people that was like legitimate. There's usually a lot of like bullshit kayfabe stuff where they're like, oh, like Bitcoin price is up. We're gonna like pretend we're going to do something with blockchains. Like like in 2017, 2018, like Visa and PayPal then. And then they kind of don't do anything, or just do enough to have enough lip service so that their investors don't like dunk their stock for missing out on the next thing. And this time definitely did not feel like that. I actually feel like everyone keeps making this comparison to fintech, but it's actually more like, and not even banks, just like non-bank financial lending people were en masse at this thing. Like every major private credit fund CEO was at this. And so I kind of feel like Circle has a very different audience than Tether, and that audience's net worth is like almost disjoint. And the set of people who will use both is almost like basically the only time that it's going to overlap is in the curve pool to trade USDC for USDT. like outside of that, I feel like they are just going to like diverge over time. And I think I could see that being a pretty hard to, like if you look at a lot of the new stable coins, I do really feel like Circle may have paid a lot for a early distribution advantage, but it's clear that like none of the new stablecoins have been able to. I'm not talking about Tether. I'm talking about all the competing stablecoins have not been able to find even like a distribution channel that's like 1/1000th of what about what the Coinbase deal was. And so like I think there's a lot of stuff you have to think about when listening about
I don't think you're right that Circle has a totally disjoint distribution channel. Circle is still making these deals, right? Even today, they're making these deals where they're giving a huge portion of their earnings of the float that's like owned by a wallet or owned by some other platform, which implies that they're still competing. Like they're obviously trying to gather up a lot of market share, and they're trying to become dominant, and they're okay with giving up a lot of their earnings today in order to build this dominant position. But it also means that they don't perceive themselves as a monopoly. They perceive themselves as being in a competitive market where they actually need to give a lot of incentives.
I did not say they perceive themselves as a monopoly. I'm saying that their competitors have generally either had this problem where they've had to pay much more than Circle had to pay to get even 1/100th the distribution, or they've just like tried to go down the yield bearing route, and the US government has slapped them in the face, and that will never really happen. It seems like that's not going to happen. So I sort of think Circle set the floor price to like what any distribution deal will look like, and it makes it exorbitantly expensive for a newcomer to actually overcome that, because like everyone's going to be like, give me 75% to 80% of the revenue, right? Like they're going to be like, Circle's paying 50, you're like a small fry, we're going to charge you way more, right? I think that there's actually this interesting, weird pricing power dynamic from it being so high that it actually makes it, the barrier to entry is hard, and that's why I think like you're more likely, ironically, to see banks be successful than I think startup stablecoins, and arguably, I'm sympathetic from the startup standpoint. I do feel like the regulation makes it very hard to be a startup stablecoin in 2025.
That's definitely true. But so you mentioned, the Circle has a dominant market position. I think we all agree with that. What do you think about the pricing though? Because that's what most of us have been commenting on here.
You know what 2 meme stocks exist that both start with C? CoreWeave and Circle, and they both were started around the same time. So that's my
Wait, so how are you positive on this?
Astrology
then?
trading.
If you're calling it a meme stock, isn't that you acknowledging that the price is crazy?
I think both CoreWeave and Circle are meme stocks in the opposite sense of GameStop. They're like meme stocks of like something that in 10 years is supposed to be 100 times as big, right?
Okay.
They're kind of like
As
they're
a
like
market or as a company specifically?
Well, that's what the problem is. There's not many proxies to bet on those two separately, so everyone just funnels all their bets into one. Like
That's what I was saying.
That's the real story. Yeah, I think that's the real story is that right now there's only one thing you can buy in public markets that represents a stablecoin, and that's Circle. And the reality, it's we talk about low float tokens, like IPOs are low float. There's not a lot of supply out there for all the people who want to own this narrative. So that's what happens. The narrative just runs, and like when there is more supply out there, then maybe there's more
although I will
real
say
price
the
discovery that can happen.
Circle IPO is much higher float than some of these data center companies. I mean, the Nebius and CoreWeave IPOs aren't exactly like those aren't exactly the thing that I would show a regulator to be like, yes, crypto is so much worse with these low float high FDV. Some of the AI IPOs are look like bad crypto tokens.
But what's interesting, actually, I think Rob from Dragonfly was doing this analysis that if you take, because as Laura you mentioned, half of Circle's revenue just goes to Coinbase, right? And so what that would imply, if you look at this current valuation, is that there's a Circle inside of Coinbase plus the rest of Coinbase's business that produces Coinbase's market cap, which would imply that all of the rest of Coinbase's revenue is trading at like a less than a 3x or something like that.
If markets were efficient. If markets were efficient.
Right, exactly. Which obviously they're not. And obviously like this is an artifact of the fact that Circle has very low float, and so therefore not that much price discovery because there's all this demand for stablecoin. Buying Coinbase doesn't give you enough of that stablecoin exposure, right? And like Circle is the pure play stablecoin investment you can make today. But it's an interesting artifact of like, hey, if markets were efficient, Coinbase should have repriced way up when everyone realized that like, oh, this Circle revenue is worth way more than we thought it was. And the reality is it's not the Circle revenue, it's the Circle brand, right? It's the ticker that's worth so much.
So I again hate to keep making this analogy to CoreWeave, but if you look at CoreWeave versus its customers ratio of market caps, and its customers are all like rev share / build out customers, not so different to this case. So like, I think you have to look at the macro market stuff, but also I do really think the market is kind of tired of betting on pure ETFs effectively in crypto and like MicroStrategy and treasuries and stuff. Like you've seen the like 10th treasury launches not doing that well, right? Like in the last few weeks. And I do feel like Circle actually feels like a real product to people that they can use on like the 10th BTC treasury company, right? Which I actually think there's some irony to these. I know we're going to talk about this soon. The irony to this BTC treasury thing is like, there might be like a golden goose that they killed by having too many of them trying to catch it at the same time.
Well, that's what SPACs were.
There's like a little, like it's almost like there's too many of them to all survive concurrently. Beyond MicroStrategy, I'm not gonna give them a.
Okay, well let's switch gears and talk about crypto treasury companies, because I think we've been touching on them a few times in the history of the show, but I think there's more wood to chop that's worth getting into here. So for those of you who are not following, the original crypto treasury company is MicroStrategy. MicroStrategy, now rebranded as Strategy, is a company that once upon a time was a software company. Now they're just basically a giant bucket of Bitcoin, and they issue corporate debt and they buy more Bitcoin with it. And for some reason, it trades above NAV. NAV being the value of all the Bitcoin in the bucket. Right now, MicroStrategy trades at about 1.7x all the Bitcoin in the bucket. And the big mystery is, why is this so? And there's a lot of competing explanations about why it is that it trades above that 1x NAV. And to be clear, at times it's traded below NAV when crypto is in a bear market and there's not a lot of demand. But right now it's trading sustainably above NAV, or I should not say sustainably, persistently above NAV. And of course, what most people think is that the reason why is that it gives you some kind of leverage exposure, and it's likely that they're going to be accumulating more and more Bitcoin. So it's kind of a way that you can get a levered bet on Bitcoin by buying this thing. So we've had more entrants. We had 21 by Jack Mallers. We had Trump Media go out and play the same playbook, buying a bunch of Bitcoin. You saw the same thing happen with Nexon in Korea. Then, of course, in Japan, there's what's the name of the one in Japan? Metaplanet. And then we just had the launch of SBET, which is an Ethereum version of this that's backed by Consensus. SBET is up 10x since they announced that they're moving to this Ethereum strategy. Now, critics have started to warn that maybe this is this cycle's GBTC. maybe this is GBTC, very famously known as the Widowmaker trade that led to the collapse of 3AC and implicitly through BlockFi and a bunch of the lending companies in crypto back in 2022. But people are not so confident about when this will happen, how this will happen, or whether it really is the same thing or not. Unlike GBTC, there's not the same kind of obvious mechanism for this leverage playing out in the market because corporate debt operates very differently from hedge funds, taking on leverage and making these trades. There was a story that was put out by Unchained talking about the compensation structure for a lot of these crypto treasury companies. Laura, do you want to summarize that really briefly?
Yeah. So basically, there's like different ways to think about how you would value a company like this and therefore how you would reward the executives. And, I think traditionally stock price is like the metric, right? But in this case, I think at least some of these companies are trying to be a little bit more innovative. So there is one in particular, DeFi Dev Corp, which is one of the ones that is accumulating Solana. And essentially, they are tying the compensation for the CEO, CFO, and CIO to the ratio of Solana in comparison to the amount of shares in circulation. So it's like Solana per share is kind of how you would think about it. And yeah, that, we don't know yet how like 21 or Nakamoto, which are some of the bigger name new treasury companies, will be compensating their executives. But basically, it's just kind of like an interesting way to look at it because right now, if you look at these valuations, a lot of them are, they're just trading at like so many multiples compared to the actual underlying assets. So it's just kind of like, yeah, is it literally just stock price, especially if, as we all know, like right now, because
it's worth spelling out why stock price is a bad idea, which is because of the fact that these things are so tied to the underlying and the underlying is very volatile. So if you just tried to stock price and Solana rips, these executives are going to make a bunch of money, but that doesn't really make sense because they didn't do anything. Even if like they fail to accumulate a lot of SOL and do the financial engineering stuff of if they don't do that successfully, but SOL goes up, stock price would go up and they would make money. And it's like, well, we know it's a bunch of SOL in a bucket. Your job is not to like have SOL go up. You can't make SOL go up, but you can put more SOL in the bucket. And that's effectively what this financial metric seems to be measuring is how effectively are you putting more SOL in the bucket?
Or how effectively are you levering up? Because really what it's incentivizing at a fundamental level is doing the crypto treasury company's strategy, trade, whatever, which is issue a lot of debt to buy the asset. A company that's 1x levered doesn't have as much, crypto per share. If you load it up with debt, like 5x, the original amount and by 5x the amount of assets, right? The company's crazy risky relative to its original equity, so to speak, but you've achieved the metric that you're being paid on or optimized for, which is amount of crypto in the thing per share. And so really what I think it incentivizes is companies to take on more leverage. And if you squint, the crypto treasury strategy looks like a levered ETF. It's way more exotic than that for so many different reasons. And you cannot model it as such like a levered ETF. But if you squint and look at it from 90,000 feet, it's a levered ETF. And really, I think the trend that we're going to see is companies trying to lever this play up as much as they possibly can, issuing as much debt as they can to buy as much of the assets as they can. Saylor's very public about that is the goal, to load as much Bitcoin in and borrow as much as humanly possible to achieve that, with the end goal being accumulate all the possible Bitcoin because it's a competition. It's a race. There's only so much. It's scarce.
Right. Well, the difficulty is like the way in which you lever up, right? Because there are bad ways to lever up and there are better ways to lever up.
And MicroStrategy used to lever up the bad way, and now it's almost the good way, which is like
it's an amazing way. Actually, it's an absolutely incredible way that they lever up now. Tarun, you were showing me some of the new offering that they recently put out in MicroStrategy, which is like the stupidest financial instrument I have ever seen, where basically it's like
strikes.
Yeah. I think the strikes is what they're called, which is like it's debt that they don't have to pay, and there's no catch up. So if they miss a debt payment, they don't have to pay it back later. And it's like a 10% coupon. And that's it. And it's like, yeah, buy my debt and I'll maybe pay you back if I want to. And I'll go buy Bitcoin with it. And I get all the upside and you're stuck holding debt.
So I think there's actually this interesting theory that I've heard people posit around MicroStrategy, which is like in the same way that the more forks that Bitcoin had in some ways made Bitcoin more valuable because it airdropped their holders to basically sell and buy more Bitcoin. There's a sense in which the forks of MicroStrategy, all these like the second and third tier Bitcoin treasury companies, if they start failing, people may just crowd back into MicroStrategy, and it becomes this kind of like shelling point for this treasury thing. This is another reason I don't think that I think we're going to see like MicroStrategy crush and continue unless there's some like catastrophic Bitcoin collapse in price, which it has shown it has can survive up to some level, like not maybe at the size it is now, but these other ones are just like competing for scraps. I feel like who are the convertible debt traders who want to buy the like fifth place Bitcoin treasury company's debt, right? Like I just don't understand how they get that feedback loop. Like MicroStrategy really was immaculate conception. To Robert's point, they borrowed the kind of dangerous way first to build up this treasury, and then now because they were successful, they have like this very cheap form of convertible debt. But the convertible debt market is not like infinitely elastic. There's not like infinite number of people who are like, I see this yield, I'm going to go on the debt side. Like most people who want to get into this trade will go buy MicroStrategy equity or go buy treasury company equity because it's easy. To actually do the debt trade, it involves a lot more work, a lot more sophistication on how you think about your risk. And also just like there's just not that much demand for people to like own that spread, right? It's like a very precise arbitrage. You need to be in large enough size for it to work out for you transaction cost wise. And there just aren't that many people. So I think of it personally as like there's a fixed pie of demand. And MicroStrategy probably takes up like at least 50% of that, if not more. Right. And the other 50%, everyone is just like fighting. And the more there's new companies, they're all fighting for the same set of convertible debt arbitrageurs. And maybe that grows, but that set grows like 10% a year. That's not growing as much as these companies demand if you look at the aggregate demand is. And I think there's going to be some shortfall. I wouldn't be surprised if we see like some of these treasury companies completely pivot because they're unable to issue debt and they have to find some alternative.
Well, let me say yes, but okay. So I think here's the biggest difference to traditional convertible arbitrage in the market for it. So if a normal, not crypto treasury company, let's just say some manufacturing company, in the heartland that does, I don't know, whatever, makes widgets, wants to issue convertibles, the market for it is looking at really the volatility of that company and the upside in the stock above the conversion price and doing options valuation arbitrage to say how much is the option at that convert worth. And the market for that is really tiny because you're basically betting on this like one little widget company and like its prospects in essence. And how many people even want that exposure in the first place? Because with a convertible, you still have the debt underwriting downside of that widget company combined with an option that you can value. With strategy or with any of these other ones, the
Sorry
company
for all
isn't.
my micro-strategies earlier.
I know
I meant,
you were inceptioning me to get it wrong. Okay. So with strategy or any of the crypto treasury companies, it's actually different than that, right? The downside across all Bitcoin companies is almost more uniform. There's actually less esoteric, weird company risk that you have to underwrite, right? It has nothing to do with the company itself. The company is a shell. The company is a holding pot or a box, And so all of these companies, in a lot of ways, look a little bit more alike. The downside is based on the downside of Bitcoin. That's going to be uniform across every one of these Bitcoin-based strategies. And the upside is actually more uniform across them as well. It's based on the volatility of Bitcoin once it becomes a pure Bitcoin play. And so it has nothing to do with the company's esoteric behaviors. It really is a bet on Bitcoin's volatility and Bitcoin's downside. And as an investor, not only is that market like 1,000 times bigger than people's willingness to bet on like some widget companies, volatility and downside, not only is it just infinitely bigger and will continue to get bigger if crypto and Bitcoin continues to go up, but each company looks more like alike than they do different. And I think it actually makes it easier for hedge funds or capital to come in and do this like at scale and in mass. And so I actually think it's going to be more sustainable than we think it is on the surface. And I think it can get actually a lot bigger than this.
do you agree with that for the Solana and Ethereum ones? Bitcoin I can kind of buy because like the market cap is just so large relative to the debt issuances that like it doesn't seem that crazy to imagine people care about the duration risk. But in Sol or ETH, it does not seem like that's going to be how many can there sustainably be for Sol or ETH?
I mean, at the end of the day, I think it's also a function of the size of the spot derivative markets, right? If there's a huge Ether derivatives market, right, it's actually not that hard to like model or hedge the convertibles of an Ether strategy company, right? And I think it's a function of just how big is that market in general. If there's no market otherwise, if we're talking about like, I don't know, pick coin market cap number 400 and you like make a company out of that, I don't think there's any demand there. Like you can't do much with it. You know, it's hard to trade. You can't hedge it, whatever. But like for things that already have a huge options market, that like we know how to price the upside and the downside of the asset, it's like it could get really big.
I just think there's like a carrying capacity to these. Like there's not, the world does not like have infinite number. Like for Bitcoin, I think people are fine with the duration risk. But even for ETH, like I don't think people want to take that long of duration risk. You can like see it in the funding rates. You can see it in kind of like ETH options on the ETF.
The funding rates between Ether and Bitcoin are pretty similar. They're not that different. Like because
but
of the stake
on the notion on the OI is if you OI weighted, it's very different. I don't think you could like eat up 10 of these ETH SBET type companies. I think like I guess that's my point. Is like
we're going to find out.
Right? Like so, I mean,
yeah.
There's 10 for Bitcoin. There's like 2 for Solana. And
No.
There's
more than 10 for Bitcoin, right? There's all these like random companies adding Bitcoin to their treasury and like in different countries.
I mean,
that's not the same thing.
There's like
that's not the same thing.
Minimum 90, or I don't even know. It's like a huge number.
Well, but no, adding Bitcoin to the balance sheet versus being just this, not just a strategy clone.
Outside the US, though, there are have been a lot of announcements for Bitcoin leverage companies.
Sure, but they're tiny. You know, they're
like, small.
Relative to MicroStrategy, they're like 1% of strategy, and they don't have. There's no real corporate debt market in those countries, and so it's kind of like okay, it's not really the same playbook at that scale.
Yeah, the one thing that I want to talk about is that tweet that everybody was tweeting that like it looks like these companies are being set up to be some version of a future play the role of some future collapse at which like GBTC or these types of stocks are at the center. And we also wrote about that. And it kind of feels like it would only really happen if you could take out loans against these. And there are other factors like, MicroStrategy could probably get whatever terms it wants, whereas like some of the other players might go out further on the risk curve and do things that are, just prime them for, more downsides, I guess, when the markets kind of go haywire. So point is like, if for whatever reason there are lenders that are willing to let you borrow against them or something, I guess that's how it would happen. But it is also something where you could see some kind of cascade, right? Where the price of Bitcoin drops for some reason or another, and then maybe some of the like in the long tail, these companies that aren't getting as good terms for their funding their purchases, but then they have to sell, and then that causes a cascade. So I don't know. Those are kind of just my thoughts, but like it was just interesting to see so many people tweet about that. And as far as I understand right now, I don't think you can borrow against these, but I just found it was interesting that JP Morgan is now going to allow you to borrow against Bitcoin ETFs, which Jamie Dimon is famously pretty anti-Bitcoin, but clearly his company doesn't mind making money off of all that. But who knows? Like
it's
if things get
low ratio though, right?
What?
Yeah, LTV.
It's a pretty low LTV, right? Yeah. I mean, they're not the only broker to do that, but the LTVs are all very low.
I mean, every other broker has done it except them, basically.
Yeah.
Oh, for ETFs? I guess I didn't know that.
For ETFs.
Well, I guess I just mean like if you're trading, usually your broker will offer you some form of margin, and I think JP Morgan's was pretty conservative, and you can definitely borrow against MicroStrategy. Let's put it that way, but not at some crazy LTV. But like most brokers will offer you short-term loans.
Oh, okay. So do you think that then does that explain all those tweets where people were saying it could be like the future GBTC?
I kind of think it's like these collapses never happen in the thing that everyone's watching.
Yeah,
So-
exactly.
Totally.
Exactly.
Like it's kind of like a little too much of a
Except for Terra.
Um,
Terra. Everybody was watching Terra.
true.
Well, everyone knew the
true.
failure mechanism for it.
Well, not
Yeah.
everyone, but some
Yeah,
people.
definitely
That's
not
true.
everyone. There was a lot of TradFi bros who were aping in who like had no idea how.
So I feel like the failure mechanism for this stuff is actually more like if one of them goes into the S&P 500 and then right after it enters the S&P 500, like all these ETFs are forced to buy it, but then in the first window before the S&P rebalance, like the coin crash is so high that it should have dropped out because it's selling debt that is duration of like when the next rebalance will happen, which is when it's kicked out, and there will not be this forced buying. Because like when you're added to S&P 500, there's a million funds and ETFs that just have to constantly buy your stock to track it. And if Bitcoin crashes a lot right after you get added and you start issuing debt, the thing is you can issue debt very cheaply because everyone thinks your stock is going up because like you're constantly being bought because you're in the S&P 500. But if the crypto assets crash enough at the next S&P rebalance, you might
Hold on,
fall
but the
out.
debt he's issuing now, it does not have any claim on like there's no
Right.
conversion.
You can't
It's not
take him into
convertible anymore.
bankruptcy if he doesn't pay you back. You're
No, but the
screwed.
debt
Yeah.
has equity conversion. They're equity convertibles. So like the
The
equity
new
that
debt?
gets
The S whatever it is, the newest
no,
tranche that they just released?
no. MicroStrategy again. They're a special beast, right? They
Yeah,
have
exactly, but
immaculate
they're the
conception.
only one that could conceivably enter into the S&P.
But all of these other ones are going to try, right? Like their goal is to
yeah, but
enter
they're
the
not going to be
corporate
able.
debt.
They'd have to.
My
flip
goal
like
is to enter the
10x
S&P
over.
500. Yeah.
No. Sorry. I'm trying to say like if there were some collapse, this is like the type of thing that like I think
Yeah, look, I
TradFi
think at this point, like, I mean, look, I don't know how he did it, but Michael Saylor has the most incredible access to capital for the shit that he's pulling. Like at this point, it's not Saylor who's going to tank the market. It's going to be somebody else. And look, if the market does tank and like Bitcoin goes to 50, 40K and it stays there for a long time, like for fucking, like for years, then yes, Saylor is going to further weigh down the market, but it will not be him who does it initially. Right, like that seems kind of implausible. Saylor will make it worse, but on the upside, he's like increasing the cyclicality of the asset, both to the upside, and if we have a downside, it's going to be harder to get out of that downside.
Well, I think the next leg up is going to be a good one. So, good for Saylor.
Okay.
No,
Fair
I
enough.
mad respect to Saylor for pulling this off. I that's kind of why I'm a little like I find this boom in the copycats kind of like you should appreciate how crazy it is what this guy did. I don't think you need to copy it because I know imitation is flattery, but this is a way to burn money on fire flattery. It's like
You
No,
don't
but
think
if it works,
doing it
if
with
he's
other assets?
successful.
I I just don't think everyone is like has like Saylor Bitcoin dollar signs in their eyes who are starting these companies when you talk to them, and you're always like. I like the immaculate
I
conception,
think it's
surviving
good.
all
I
of
think
these
it's good
crazy
what-
crashes.
Totally.
None
Look,
of them will
Saylor
have
is
that.
Saylor's a gangster. Saylor's a gangster. There will never be another like him. And what Laura points out
Well,
is that,
it's
look,
not that there will
people should
never
not
be. It will be a
compensated like
different
him.
game. It will be a different game.
Yeah.
Not
but
the
people
same
should not be
game.
compensated the way that Saylor was, right? Saylor owns so much of MicroStrategy. All these other people, like running the quote unquote next MicroStrategy, they're all hired guns. They're all mercenaries, and they should not get paid the way that Saylor got paid, right? They should be like, oh, you have to optimize this financial metric that Saylor basically invented, because he realized, like, look, I'm a financial engineer. And if you're a financial engineer, you should get paid on the value of your financial engineering, not on the value of the underlying. So
Yeah,
I think we're moving in the right
hard,
direction.
It's just hard to get that excited about these things. It doesn't feel like the market is that sustainable for them. I would love to be proven wrong that like there could be 500 of these, but it just doesn't. It's like I don't know.
Yeah, I mean, I feel like what's going to happen is, the reason why it worked for Michael Saylor is because he is a very good mascot, right? So like 21 has a shot because Jack Mallers is kind of the same type of personality, but maybe like for a different generation. These are not my original thoughts. I forget who said this or where I heard this. But the point is like, I feel like for a lot of these, you kind of need somebody to like be that, evangelist in the face of the company that will get people excited, because otherwise, yeah, I mean, financial engineering is important, but also like things like the terms that you could use to, finance these purchases, like part of, whatever the magical juju is that like Michael Saylor has, like that is an ingredient that's necessary from these executives also, I think.
I agree. You have to scream, there is no second best,
Wait. Okay. Let's play a little game that I'll call Fantasy CEO for one of these companies. Like, pick an asset and like who in the world would be the best Michael Saylor of that asset. So who do you think for ETH and Sol? Who would those be?
So honestly, but you guys, this is why, because like, and oh my god, I got so much shit for the Max Resnick show that we did with Tarun. And
don't worry,
for whatever
me
reason,
too. We
I know, for whatever reason, people think that I hate Ethereum, but I don't. But I had been thinking about this, and I was thinking for the Ethereum treasury companies, I was like, who is that person? And like everybody's like, oh, like maybe Joe Lubin, but Joe Lubin, he, in my opinion, he is not as charismatic as kind of like a Michael Saylor. Like, just I couldn't even think of like who that would be. Can you like, so. Like obviously this is not something Vitalik would even want to do, so clearly not him. Not that I think he should, or that anybody would even suggest him. But he's the face of Ethereum. Other than that, like we've got the etherealized people, but like I don't know.
Don't forget the bankless guys.
Wait, but you.
That was a joke.
We had a show. Yeah, we literally had a show with David from Bankless, and we were like,
That's
"Yo,"
right.
and we were like, "Dude, you should be the guy."
I still stand by that. He's like the best I could come up with. What about for Solana? Let's Solana, I kind of feel like Ansem. I know it's weird to say.
Yes.
Ansem actually would be quite
Ansem,
good.
no.
No. I think he would be good. I think he has a little bit too much history with the meme coin stuff that I think would make it difficult for Wall Street to embrace him.
Yeah.
You
However,
have to raising convertible notes, that does not seem like his jam.
no, but
All right,
That's true.
Ansem, if you're ever interested, clearly they're 3 out of 4 podcast hosts agree.
But to your point about Jack Mallers, right? I think like he sort of plays that role, which is Solana. It's more of a young person's game. It's more about Gen Z and Gen Alpha. I think Ansem would play really well for that.
yeah, and frankly,
Like the convertible stuff does itself, right? Once you're the nth of these, it's kind of like, okay, show me your metric. Will people buy the stock?
Also, even the legal
fine.
docs are probably standardized for this.
Yeah, exactly. Like just AI is running all of them at this point. You don't need to worry about that. It's pretty easy.
yeah, but the thing about like how we were talking about how the prices at which these stocks are trading is just like nowhere near any kind of fundamental analysis. Like that is why Ansem would be a good quote unquote mascot, as I'm calling. You know what I'm saying? Because he's the meme coin guy. He's the person who like. He could be associated with some random meme coin, and let's just face it. Like for most meme coins, there aren't like good quote unquote fundamentals, right?
That's a good point. Is that if it's the Solana, MicroStrategy, it's not going to get distribution on CNBC. It's going to get distribution on TikTok, and so it's really like who's the TikTok mascot, not the CNBC mascot for this thing.
Exactly.
Okay. Wait. We missed one very important asset for this, which is XRP. Who is the XRP? Because like if you look at the everything above Solana, the only thing we've kind of missed are BNB and XRP. BNB already has CZ. It's like I don't think there's really any other mascot. But so XRP.
I think it'd just be Garlinghouse.
Can it be like one of the leaders of the project?
Well, I think
feel like
it just
it's
be like
gotta
Ripple Labs itself goes public and
Yes.
then just gets a bunch of debt and buys more XRP.
Okay, yeah.
Yes, that is perfect. That's perfect.
Like,
Okay,
wouldn't that make
actually,
perfect
that would
sense?
be really that would be really funny. if that
They have an underlying business. It's actually IPOable, right? Like they've survived this SEC case. It's kind of the perfect setup. And you don't even need a new CEO.
You've convinced me.
And they have a stable
Okay,
coin.
done.
Speaking of the meme
They have
coin.
a stable coin.
Wait, but also wait,
That's
I'm
true.
sorry. So I missed like part of what you said, but are you saying it's because they already hold like 50% of the Ripple or whatever it is?
Great
They
start
already
to
own a
the
bunch of
treasury.
Ripple.
Yeah,
Exactly.
amazing.
Great start to the treasury. They've already loaded up, and they just keep buying more. Like people thought the business model of Ripple Labs is
To sell.
selling the
No,
XRP.
now it's to buy it.
Wrong. It's to buy the XRP.
Oh my God, if they actually pull this up. But by the way, you guys, I don't know if you saw, there is an XRP holding company, this Vivo Power. It's going to be like, I think they're seeding
I
it
did
with
see that.
121
The Saudi. This is the Saudi guy, right? Yeah.
Yeah.
Saudi.
Yeah, and
Okay,
it's
interesting.
starting with
Well, they're
$121
gonna
million.
get mogged by Ripple Labs. You mark my words.
I mean, it would be
It's coming
really
for you.
funny actually if Ripple Labs just did it, because it's like the natural endpoint of this whole saga is like you start a coin just to like have the labs company do this.
So they ended it. So basically, then they would have played it all perfectly. Where on the way up, they make their money selling like billions and billions and gazillions of dollars just selling and dumping on retail. And then at like this moment in time, they pivot and then they start, they just become, an accumulation company and an XRP treasury company. So
I think it's
Dear
beautiful.
Lord,
I think it's
may
beautiful.
this not play out like we predicted.
yeah.
Okay, well, so one last story I wanted to get to. So kind of circling back a little bit to stablecoin mania, there's a project called Plasma, which is supposedly a stablecoin chain that's affiliated with Tether. There's a bunch of these now that are basically supposedly natively or quote unquote natively issuing Tether, and they have 0 transaction fees on the chain. So the idea is that this is supposed to be better than Tron because Tron has fees; these have no fees, and they facilitate stablecoin payments. So Plasma, you guys aren't investors in Plasma, are you? No. Okay. So Plasma, they recently did, we're not investors in Plasma. They recently did an ICO of raising at a 500 million valuation via Sonar. They raised $50 million for 10% of the Plasma supply at a $500 million FTV. They had these vaults, which I think were like liquidity vaults that they filled up with $500 million of demand in, I think, the span of seconds. The top 10 wallets held 38% of the total supply. Top 17 wallets held 50%. One wallet alone deposited 50 million. There was a gigantic gas war. I think one person paid $100K to get in with their $10 million of USDC. So we're seeing kind of this ICO boom. Now, this ICO took place on a platform called Sonar, which is a new product that was released by Echo, which of course is created by Kobe. So Echo was originally a platform, or not originally, it still is, a platform for these kind of syndicates that are led by individual syndicate leaders who syndicate deals, and it's kind of more traditional syndicate style investing where you have to be an accredited investor, usually in some jurisdictions, to invest into these things. But Sonar is a response to the fact that more and more people have been asking for ICOs, and the idea is that Sonar, because ICOs are of questionable legal status, Sonar is a self-hosted ICO platform. So you can, as a team, use Sonar software to run the ICO yourself, but Kobe/Echo, they're not running the ICO. They have nothing to do with it. They're just software providers, essentially. So that's Sonar. So these guys did this ICO. I think they're European based, and kind of a crazy explosion in the ICO meta. Laura, you and I argued recently on the show about whether or not ICOs are going to come back, and I think I was pretty incredulous that, well, ICOs are super illegal, so obviously they're not coming back.
Because I was the one who said, wait, don't you guys think this is happening? And then you suddenly started like reaming me and saying it's not. And I was like, wait, I think I'm noticing trends. But anyway, yes, I feel vindicated. I'm going to take my victory lap right now. But
Boom. Laura
I mean,
won.
every first year of a Trump term has been an ICO boom.
Oh, true. Okay.
No. I'm just saying, like 2017 this year.
Right. True. This is why you're not a public markets analyst. But
no,
yeah. I'm just saying it's like funny, right? Like the first year of Trump's rule last time and this
Trump's
time
rule.
is like everyone's saying ICO again.
Okay. All right.
Yeah. So Kobe was saying that, they started Echo, but because of the syndicate model, people weren't in love with how they needed to get endorsed and how they didn't have full control. And, this allows them to do that. And so I just find it so interesting that basically it's more like the, what's the word? Because in my book, I wrote all about ICO. So you just look at the DAO, where they basically created this big, like they got all this money. And then once it was in the smart contracts, they realized, oh, shoot, we didn't build out any of the tooling for you to do anything once the money is in there. Like we have no way for you to get the money out. Then, of course, when the hack happened, that created issues. And then, we saw like the janky version where, people were doing this for my Ether wallet. And like Taylor Monahan was dealing with people who like lost their money or was getting phished or, scammed or whatever. And now it's like we have the kind of adult version. And, I feel like basically this kind of is sort of this like long-term trajectory that we're seeing where, back like in the .com era, companies would, be startups, and then they would go public like kind of early. Whereas nowadays it takes like forever. Like companies, they just don't go public early. So now we have like a new function where you can kind of get in earlier. And like, yeah, I understand there's like risks and there needs to be education, and there probably also needs to be some changes in the accredited investor laws, but at least in the US. But the point is like, just kind of when I look at the full span of like what's happening across history and how like markets are changing, like it does make sense to me that there will be something more like this, whether it is exactly this, because obviously there were a lot of problems with this ICO, but yeah, I could see it becoming more and more of a thing.
All right, we got to wrap up. Robert, do you want to give us the last word? Are ICOs here to stay?
ICOs are hopefully not here to stay.
Hopefully not. Oh shit. Okay.
No.
All right,
Next episode on the shopping blog.
We'll have to come back to this. We'll come back to this. Okay. We'll see if they're more.
I think they're always going to come back in different shapes and forms. The 0th law of capitalism.
Whenever Trump's rule begins.
The first year of every rule is marked by the blue moon of ICOs.
The 0th law of capitalism is everyone always tries to find a way to securitize things that people tell them they can't securitize.
Okay. Inspirational. Thank you, Tarun. Thank you for the inspirational speech.
You're welcome.
All right. With that, we got to wrap. Thanks, everybody. We'll be back next week.
Thanks, everyone.
See you all.
Bye.